Hello, I'm Trader Daniel, and today I would like to discuss how I assess market bias using correlated assets. Market context is very important in trading. Specifically, I prefer to trade in line with market bias, and I try to fade the market only when I assess that the probability for a bias shift is high. I assess market bias using structure, correlated assets, and cycles analysis. For market structure, I look at key levels, price position versus different VWAPs, etc. But today, I will focus on how I use correlated assets to assess bias on ES futures. Let's go to today's ES charts. This is ES September contract, today, July 20, 2026, 1 minute time frame. At the bottom of the chart, you can see a tool that I have developed. This tool looks at different ETFs that are highly correlated to the S&P. Some are positively correlated, meaning that they tend to move in the same direction of the ES. Some are negatively correlated, meaning that they tend to move in the opposite direction of the ES. The green line represents money flowing into the positively correlated ETFs, and I call this line the offense line. The red line represents money flowing into the negatively correlated ETFs, and I call this line the defense line. The difference between the two lines is the risk score line. When the risk score line is above 0, we are in a risk-on environment, and I prefer to buy. When the risk score line is below 0, we are in a risk-off environment, and I prefer to sell. The slope of the risk score line is also important. Positive slope suggests buying pressure in the ES, and negative slope suggests selling pressure. Finally, by plotting the risk score line against the ES line, I can spot market anomalies, meaning divergences between the two lines, that I can exploit in my trading. For example, right after 9:30 a.m. Eastern, we have a bearish divergence, which indicates a selling opportunity. We have another bearish divergence at about 10:45. Followed by a bullish divergence at about 11:50. In this case, we have a buying opportunity. Finally, we have two bearish divergences at 1240. And at 1420. It's a very, very small one. Very difficult to see, honestly. And lastly, we have a bullish divergence at about 1520. I hope you found this helpful. If you want to learn more about my trading playbook and tools, you can find me at compassfx.com. Thank you for watching.